we are kicking things off with a deep dive into the market. We're looking at Microsoft and their recent performance. Microsoft delivered a significant negative return of 6.6% over the last year. We are breaking down the numbers to see exactly how this stacks up against the rest of the entire software industry. We'll show you the hard data on where Microsoft stands right now. This lifetime license is available right now for only $41, a massive discount from the regular price. We'll cover the benefits and also the important trade-offs you need to know before you make that purchase. And finally, we're looking at the future of the operating system. Microsoft is making major changes to Windows 11, testing new taskbar positions per monitor and new start menu controls. Diego Baca, the design director at Microsoft, is discussing these upcoming features that could bring back some beloved Windows 10 functionality. Don't miss out on these critical updates. Stay tuned right here for all the latest Windows, IT, and AI news. Microsoft, MSFT, is facing a reassessment following a recent share price pullback, with financial models suggesting the stock may be undervalued based on cash flow and earnings metrics. A discounted cash flow analysis, utilizing a two-stage free cash flow to equity approach, estimates an intrinsic value of $570.40 per share. When compared to the recent trading price of $421.92, this model indicates that Microsoft stock trades at approximately a 26% discount to its estimated fair value, leading to a conclusion of being undervalued based on this cash flow view. Furthermore, an analysis of the price-to-earnings, P/E ratio shows similar results. Microsoft currently trades at a P/E of 25.03x, which is below the software industry average of 28.27x and the peer group average of 30.59x. When benchmarked against simply WallST's calculated fair ratio of 40.81x, the stock is also deemed undervalued on this earnings multiple basis. Beyond traditional models, the report highlights the value of narrative-based valuation. These approaches allow investors to attach specific stories, such as Microsoft's AI infrastructure build-out or Copilot adoption, to explicit forecasts for revenue and earnings. Two leading narratives were presented. A bull case projecting a fair value of $466 per share, implying about a 9.5% undervaluation at the current price, and a bear case projecting a fair value of $333.48 per share, suggesting the stock is about 26.5% overvalued under more cautious assumptions. Analysts emphasize that these different views, grounded in varying assumptions about growth, margins, and AI integration, illustrate the range of potential valuations for Microsoft. The analysis concludes that, based on fundamental data, Microsoft appears undervalued, supported by its strong track record and dividend payments. Professionals looking to reduce recurring software costs have an alternative to the Microsoft 365 subscription model. A lifetime license for Office 2024 Home and Business is now available for a one-time purchase of just $129.97, down from the regular price of $249.99, with a sale ending May 31st. This option offers a way to access the latest versions of essential Office applications without the annual subscription fees. This alternative is particularly appealing to users who primarily rely on core tools like Word, Excel, and PowerPoint, finding the extra features in Microsoft 365 unnecessary for their workflow. The Office 2024 license runs locally, allowing users to work offline without needing a constant browser connection. The suite includes several significant updates. Excel now supports larger datasets and dynamic arrays, enabling users to handle bigger workbooks more effectively. PowerPoint has been enhanced with built-in recording capabilities for presentations, supporting voice, video, and captions, which is valuable for remote collaboration. Furthermore, the new version integrates AI-driven helpers across the applications, offering suggestions for writing, formatting, text summarization and translation, and smarter data visualization in Excel. Outlook also features an updated accessibility checker to improve formatting and clarity. While Microsoft 365 operates on an annual subscription model, costing $99.99 per year, the Office 2024 lifetime license provides access to these core tools for a single payment, potentially offering significant long-term savings. Savvy professionals are encouraged to consider this one-time purchase option to bypass ongoing subscription costs. A significant deal is currently available for Mac users seeking Microsoft Office Home and Business 2019. Users can secure a lifetime license for the software for as little as $41, down from the regular price of $320. This offer provides permanent access to the core applications, including Word, Excel, PowerPoint, Outlook, OneNote, and Teams Classic. The key feature of this deal is that it is a one-time purchase, eliminating recurring subscription fees. The license is tied to the user's Microsoft account rather than a specific device, allowing installation on a single Mac for personal or professional use. The software is optimized for newer macOS versions and supports features such as Retina display and full-screen viewing, with instant delivery of license keys and download links upon purchase. However, potential buyers should be aware of the significant trade-off. Microsoft has officially ended support for the Office 2019 version on Mac, meaning users will not receive any further security updates or bug fixes. Furthermore, users must disable automatic updates after installation to prevent license invalidation should they attempt to upgrade to a newer version. This makes the offer a viable option for those needing only the essential Office applications without committing to a Microsoft 365 subscription, but it is not recommended for users requiring ongoing support or the latest features. The discounted price of $41 is subject to change, as prices from sources like Stack Social are dynamic. Microsoft is rolling out significant updates to Windows 11, restoring several long-awaited features from Windows 10, while testing major interface overhauls for the taskbar and start menu. The first wave of improvements includes the ability to reposition and resize the taskbar, with future plans to allow users to configure different taskbar positions for each monitor and enable drag-and-drop functionality for movement. Microsoft has quietly indicated testing for multi-monitor taskbar positioning, building on the previous capability of dragging the taskbar. While users currently manage taskbar layout through settings, this is set to evolve, moving towards a more intuitive drag-and-drop experience. Diego Baca, design director at Microsoft, confirmed the evaluation of these features, emphasizing a focus on delivering core functionality while maintaining simplicity and predictability. In the Start menu, Windows 11 is introducing a resize control offering large and small options, addressing user feedback regarding the adaptive layout that consumes excessive space on lower-resolution displays. This reintroduces manual size control, a feature previously available in Windows 10. Furthermore, Microsoft is restructuring the Start menu feed by replacing the Recommended section with Recent. This change signals the discontinuation of promotional content, including third-party app advertisements, which were previously present in the recommended feed. The new Recent section is designed to improve file relevancy by displaying recently installed applications and items based on usage frequency. To enhance user control over the Start menu, Microsoft is implementing section-level toggles, allowing users to independently enable or disable pinned and recent sections, offering granular control over the displayed content. Additionally, a new feature allows users to hide their name and profile picture in the Start menu, a privacy measure useful for sensitive activities like live streaming or screen sharing.